I'm Sam Slater and I'm here today with Peter Elston, who's manager of Seneca Diversified Income Fund. Hello, Peter.
Hi Sam, how are you?
I'm very well, thank you.
Good.
For our listeners who are new to investing, can you please explain what a multi-asset fund actually is?
So, many funds are equity funds or bond funds, and that means they just invest in one asset class.
Okay.
Multi-asset funds are funds that invest in a number of different asset classes, which could be bonds or equities, but there are some other asset classes as well, such as commodities. And so unlike single asset class funds, which are just investing in one asset class, multi-asset funds are spreading your investments across a number of different areas.
Excellent, thank you. And Seneca Diversified Income is one such multi-asset fund, and it's run by a team of people with yourself as lead. Each of those people have specific areas to cover. So Mark looks at UK companies, Tom and Gary cover overseas companies and fixed income, and Richard looks at specialist investment. So how do they come to you with their ideas, and how do you go about choosing which ones to invest in?
Well, the answer to that is that they don't really come to me. We are very much a team effort, and we have quite a flat structure. Yes, we have a very sort of clear investment process that everybody has to adhere to. But beyond that, we're quite a flat structure.
Okay.
So in many ways, we're all bringing our own ideas to the team. And then it's up to the rest of the team to listen to our colleagues' idea, judge it on the basis of whether our colleague has done enough work, or on the basis of whether it fits with our investment style, which is value-oriented. So something has to be recommended on the basis of it being cheap in some way. And then on the basis that both of those criteria are satisfied, it's quite common for the team to then approve the idea, which will then go into portfolios. But we're all bringing ideas to the party, and I too, I'm a specialist myself. I'm not just a CIO. I'm one of the specialists, as it were, and I do asset allocation.
Okay.
So my ideas that I will bring will be along the lines of we should increase equities or decrease bonds or increase specialist assets, and it's up to the team to agree whether those are good ideas.
Okay. And you were actually based in Asia for a previous job. What insight does that give you into the region, and do you find it gives you a natural bias towards or against it when you're making your asset allocation decisions?
Well, that's an extremely good question. I was based in Asia for 25 or so years, and they were extremely interesting years, and I learnt an awful lot about investing. Asia is a very high growth region, and that can be good and bad. It's good in the sense that it's a rising tide that lifts all boats.
Yeah.
But also high growth can make companies either a bit lazy or indeed corrupt. There's an awful lot of corruption in Asia, whether that's at a company level, whether it's at a government level. There's a lot of corruption. So there's a whole range of different things that I think I learnt about because I was in Asia. So coming back to the UK, I think what's useful is that I'm able to bring that sort of understanding of the importance of governance, or how growth isn't necessarily a good thing, and that can be something that is also useful when it comes to investing from this part of the world.
And Can you give us a little bit more detail about some of the specialist investments that you hold in the fund, please? For example, you hold the intriguingly named Doric Nimrod Air 2. What is that exactly?
So Doric Nimrod Air 2 is an aircraft leasing trust.
Okay.
Well, to be more precise, it's an aircraft investment trust. So this is a listed investment trust, listed in the UK, that has bought a number of A380s. Now, A380s, as you and your listeners might know, is the super jumbo.
Yes.
And so this trust buys these super jumbos, uses a fair amount of debt to finance those purchases, and then leases them. And the airline that it leases them to is Emirates.
Okay.
And so DNA2, as the trust is known for short, will receive lease payments from the airline.
Right.
And it'll use those lease payments for a couple of things. It'll use them to pay off the debt, and what's left will go to the shareholders of the trust. So what you'll see is that this trust, and not just this one, but there's a couple of others as well, actually yield in the order of 8-9%.
Gosh, okay.
And on top of that, there's also a bit of potential for capital growth.
Yes.
Because when the trust takes possession of the aircraft at the end of the lease, it can actually be worth a lot more than they have it on the books. And that capital gain will also be something that accrues to shareholders. So very interesting. And we're sort of quite decently positioned in that area in the fund.
And you also invest in musical rights, I understand. How
Yes.
does that work?
Music royalties, yes, another interesting area. And in fact, this area of what you might call specialist investment trusts, we call this area specialist assets. It's a really interesting area because what you're doing is you're investing in a listed trust structure, and those trust structures will themselves invest in illiquid assets.
Yes.
Now, those illiquid assets could be the aircraft that we've just talked about, it could be bricks and mortar property, it could be infrastructure projects of one form or another, or it could be intangible assets like music royalties. And this was a trust that was launched last year. It was the first of its kind.
Okay.
And the idea is that the trust will buy music rights from the owners of those music rights,
Yes.
and that's normally the person who wrote the song in the first place. And there's this nice arrangement where the trust is enabling the songwriter to monetize
Okay.
their asset, which many of them would like to do. But it's not just about that. There's a very important point here, which is that the music industry has been in decline
Yes.
for 10, 15 years up until recently, and that was because of piracy. And because we now have these streaming services, this is allowing people to pay a small amount of money every month to get access to all the music they want. And so it's just not worth trying to find a pirated song anymore.
No, I suppose not, yes.
And that of course means that the revenue that the likes of the streaming services get will go to the owners of the songs. So that's a really key part of the investment case for this. There's other bits and pieces as well, like collection of revenues is becoming more and more efficient. But it's just a really interesting opportunity.
Fascinating,
and,
yes.
and again, decent yields and with prospects for some capital growth as well.
And talking about growth, last year in December, when stock markets around the world fell, and along with them many funds in your peer group, this fund actually saw its value rise quite dramatically. Why was this?
So there's a couple of reasons for that. One reason was that we've been moving our funds to a more defensive position over the last couple of years. And so that defensiveness did help us to do better than our peers in December. But a key reason is that we had a holding called AJ Bell, which we've held for many, many years as a private company.
Yes.
And then in December it was listed. And so not only was the listing price well above our carrying value, but also after the listing, for the rest of December, the stock performed very well. So we had like a double whammy that meant that the fund did perform very well in December.
Thank you. And finally, just before you leave, you mentioned earlier that not only you're a fund manager, but you're also Chief Investment Officer for the company. Can you explain what this role entails, please?
So I have a couple of hats that I wear. And in some ways, a good way to think about this is that I'm a player manager for a football team. My managerial responsibilities relate to introducing and maintaining the investment process and making sure all of my colleagues stick to that investment process. But I'm also a player in that I have a research responsibility, and my research responsibility is asset allocation. For my colleagues, I've got 4 colleagues, and they're responsible for making decisions in their areas, which are UK equities, overseas equities, fixed income, and specialist assets. So, if you like, we're a 5-man team with me as the manager, and also playing as well. But I mean, the reality is that once you have a good process in place, it becomes very much a team effort. So everybody on that team is contributing very significantly to the performance of the fund.
Excellent. Thank you very much, Peter. That was really interesting.
Thank you.
I'm Sam Slater, and if you'd like to listen to more of our podcasts, please subscribe to FundCalibre.